really pivotal week.
Yes. So, I mean, I think like we've discussed about before, I think what really makes sense is just to pay attention to the fundamentals and what's really priced into the stocks, right? So I think there are potentially some of these tech companies that might, disappoint, but are going to be less vulnerable because they're already pretty cheap, like on any fundamental basis, and others where I'd be just much more cautious.
Can they afford to disappoint after the kind of run they've had from the low in June?
I'd say the stocks that have had a run, I don't think can afford to disappoint. I mean, Snap's earnings last week really gave us kind of a preview of what might be ahead, I think, for many companies.
Oh, you think that? You were
Yes.
shaken a little bit by what they reported?
I was worried, for them that it might be disappointing. So, yes, I think Snap is potentially like the canary in the coal mine, or like a warning for many companies that have, been driven by narrative for many years, not ever have a proven business model, and seem to be such like kind of secular share gainers that they wouldn't be economically sensitive. And many of these companies have benefited by, I'd say, a largely momentum-driven rally since the June lows. And I think that there are going to be other companies with a similar profile to Snap, that could have very significant downside because of that setup.
But you're not talking about the Alphabets, the Microsofts, the Amazons, and the Apples, are you?
Right. So, well, certainly I'd say, an Alphabet, where we're much more constructive on relative to all those other names, is going to be, in a much better position because it's actually not that expensive of a stock, right? It certainly could see some near-term weakness, but this is a company that is not anywhere in the froth land. A Microsoft, certainly a stock to own for the long term. They've already signaled some economic weakness. I don't know, valuation's a little higher, might be a little bit more challenging. Some of the other names, I'd potentially be more cautious on, just given the level of enthusiasm that I think is priced in.
So we're seeing that NXP, guys, is out, which is just let you know that Christina Partsinevelos is going through that, and I'm going to jump to her the minute that she's ready to rock and roll here. But this is a good read, as I've been telling all of you, about not only the health of the chip space, but the auto business. 50% of their business goes there. You can see shares right now trying to figure out which direction they really want to go. We'll have more on that coming up. This sort of your headline is that the bottom may actually be in, unless the caveat is, of course, unless we have some big recession. Right.
Well, I think that this could be a bifurcated market. I think the bottom might be in certain stocks, but is nowhere in others. So this actually could end up being one of the most dynamic earnings seasons we've seen in a long time, because we do have very beaten up, you call it the traditional more value stocks and consumer discretionary and other sectors that are trading like there's going to be, quite a recession ahead. People are thinking, 2019 earnings isn't a good baseline, or because consumers have inflationary pressure, so they're going to have less discretionary spending. Costs are up higher. Well, that's what's already in the price of these stocks. And so I think, again, a kind of a potential signal of what might be to come for many consumer discretionary stocks was Bath & Body Works, kind of the mall-based retailers, report last Thursday morning, right? They reported, they pre-released a guide down 30% in earnings. Yet the stock was up on the day. The stock was up over 20% last week. Why? Because the stock had been trading at 8 times the earnings expectations going into that print. It's still at 12 times, right? This is not that expensive. And so I think that is potentially emblematic of what we might see for a host of really beaten up cheap companies that actually have real business models and are facing some cyclical pressure.